Private fairness industry faces ideal typhoon, as marketplace turmoil bites Berlin. Private fairness traders accrued in Berlin at their annual get-together are fretting a season of record buyouts is drawing to a close after per week of marketplace turmoil and recession fears as critical banks throughout Europe have hiked hobby fees. CashUric buyout budget are set to stand higher financing costs to get their offers to the finishing line. Things will worsen earlier than they get higher. Marcus Brennick, international co-head private equity at EQT NYSE, EQT, told at the Super Return International Conference. Between China, deliver chains and interest price hikes which impact on valuations, it equals an excellent storm. Armed with billions of bucks, buyout companies have thus far been a major driving force of worldwide dealmaking, with interest hitting an all-time high of €105 billion in the first 6 months of the year, consistent with Refinitiv statistics, as compared to €95 billion in the equal time remaining year. But the momentum has slowed and the pipeline of latest investments is facing headwinds as galloping inflation blows valuations huge aside. Deal volumes come down during times of uncertainty because capital is shy, said Hazem Ben Gassem, co-CEO at Investcorp. The query is whether or not interest charges can resolve the problem, Ben Gassem added. The new environment has induced many offers to crumble, with private equity funds being unable and unwilling to pay as much as fill the valuation hole. The sale of a stake in German healthcare technology provider Stratec is amongst a sequence of take personal conditions that have fallen apart on fee, numerous assets advised. Dealmakers do now not assume a first-rate quantity of interest earlier than the end of the year as corporations need time to digest situations and take inventory. The new pricing truth has not but sunk in and decision makers feel their organizations are worth more, EQT's Brennick stated. There wishes to be more of a truth test in pricing among shoppers and dealers. The hurdles lie with supplier expectations. The demanding situations in pricing deals are partly related to the Russia-Ukraine struggle, which has affected strength expenses and purchaser self-assurance. But buyout finances have learnt their instructions after the economic crisis and are anticipated to be extra cautious before splashing out on agencies which might be more uncovered to risk. Valuation degrees have not adjusted yet materially to fact, so bidders are selective as to what they put money into and offer greater conservative pricing than dealers frequently need, stated Nikos Stathopoulos, chairman of Europe at BC Partners.